end of our call today, you guys will have a good understanding of who Skeps is and what value add we can bring to both you guys and your merchants. My colleague Marilyn, she's going to be joining as well. She's just currently on a call that's running a little bit over, so let's just give her a minute. She'll jump on when she can. And in the meantime, I will go ahead and get started. Let me know if you're able to see my screen. Okay, the PowerPoint presentation.
Yes, we can see it.
Perfect. Okay, cool. Well, Skeps, for anybody who doesn't know, we are a pay over time platform. We enable merchants to be able to connect their potential consumers to different lenders, not just a single lender, but multiple lenders, to potentially offer them financing for their transactions. You'll see a lot of other pay over time providers. They might have, a strict, you can make 4 payments instead of paying a lump sum today. You can make payments over, 3 or 4 payments. We don't target those lower ticket amounts. When I say lower, I mean less than 500. We target merchants that have those transactions over $500. So let's see. So on our presentation today, we'll cover a little bit more about who Skeps is, as well as who your Skeps partner team is. So who you come to if you have questions, if you need anything to be clarified or you have potential merchants. What is the value proposition of Skeps? We'll go over a demo of the Skeps platform so you can see what a consumer will see when they're actually applying for a loan. We'll go over what verticals we're able to support, how that we can determine merchant eligibility, because there's a lot of different lending programs that we're able to help facilitate merchants to get set up with, how you refer an account, as well as who your customers need to reach out to, or who do the merchants reach out to when they need support. And I apologize about my voice ahead of time. I got that, that fun winter sick. So who is Skeps? Skeps are a platform that we connect accredited financial institutions. Oh, that doesn't want to go back. There we go. To businesses or merchants through our platform. And we also connect to other different credit offers, like we connect to Plaid and Equifax so that we can pull and create a full merchant profile or full consumer profile, sorry. So that banks know who a customer is so they can determine very quickly whether they want to issue a loan to them or not. Right now, a few of our main lenders are going to be Citibank, TD, and FNBO. They have all been around for a very long time, so they have, financials that they're not going to run out of lending power. So you don't have to worry about them stopping their programs immediately. Your Skeps partner team is me, Corey Harmon. I'm the director of partner success. So my whole job is to help you succeed. Make sure that you have the materials and the knowledge. Make sure you have what resources you need in order to reach out to your merchants and educate them on the Skeps platform and what we have to offer, and how it will benefit their business. And then Scott Bodley, he is the VP of Partner Development. So he often works hand in hand with me. If you guys have larger enterprise size merchants that you'd like us to jump on calls with and kind of help them through the sales process to get them onboarded, we are more than happy to work hand in hand with you to get through that process. So what is the value proposition of Skeps? So in order to retain customers, in order for a merchant to retain customers and help grow their revenue, they have to be able to offer modern and scalable payments to their consumers. You'll see a couple of statistics here on the screen. The first one is going to show you the 70% of retail executives believe that payment preferences have an impact on their consumers. The consumer might decide to go with one merchant as opposed to another because of the payment methods that they offer. I'm sure you guys are familiar with other alternative payment methods as opposed to just credit card processing. But the more payment methods you have, the better you're able to reach out to your customers and be able to accommodate them, which means that you get more sales. So their sales would be able to grow. There's an estimated $23 billion of lost orders based off of cart abandonment due to limited payment solutions. And 78% of retailers believe that customers would be very or extremely likely to switch who they're doing business with based off of what payment methods are offered to them. You know, I know for me, I'm redoing my basement, renovating my basement, and I have to get carpet, and it might not be a purchase that I would rather finance it over time as opposed to pay a whole bunch of money up front or put it on my credit card because interest rates are so high. So if the merchant that I'm looking at, the flooring store that I'm looking at, that weighed heavily on who it was that I went with in order to get that flooring for my basement. A couple of the challenges that merchants are facing when it comes to the pay over time industry is that there's often high cost or double-digit merchant discount rates. So the merchant's cost to be able to offer that financing is extremely high. And in addition to that, the APR offers that are offered to their customers are also high. Being able to work with a lot of the banks, Citi, TD, FMBO, they are able to provide extremely competitive offers, that are necessary not only for merchants to be able to afford them, but also for their customers to actually want the loans. A lot of the other pay over time providers, they have short-term loan lengths that are capped at $2,000. We are actually able to go up to $150,000, and these are all unsecured. So it's like if you're, doing home improvement, if you're doing something to your home, you don't have to get that home equity line of credit where you have a lien on your home after that point. And it goes extremely high without you having to actually provide the customer having to provide a whole bunch of physical documentation. They can just do it from the privacy of their home, right from their mobile device. Or in store. We have a whole bunch of different flows that we'll talk about. We're able to extend the life of the loan longer than your rigid pay in 3 or pay in 4. Our loans go anywhere from 6 months, depending on the vertical, all the way up to 25 years. So we have quite the spread of loan options available. A lot of times they don't have any customer support for merchants. We offer great customer support. Marilyn, who will be joining momentarily, she is great. Her and her team provide excellent customer service, and they're available and quick to respond. And also a lot of other providers don't offer solutions for in-person or in-store opportunities. So those retail storefronts where your customers might come into, they don't have an option to be able to do financing, whereas we're able to accommodate both in-store, moto, or in-person transactions, like for those that might go door to door, as well as e-commerce. And the flow looks a little bit different for each one of those, but for the customer side of things, it's essentially going to look the same. So with our service, we offer competitive MDR rates. We do offer some white labeling to the extent of they're going to be able to tell, the customer's going to be able to tell what merchant it is that is offering this financing. So they're not going to completely leave and not have any confirmation of what merchant is actually hosting the payments. Does anybody have any questions up to this point? Okay. The next section that we'll go on is going to be the demo. So this demo, like I said, we have actually have multiple different workflows. It can be the retail store, e-commerce, or in-person sales flow. This particular demo that we're going to look at here is if your customer is right there in front of you, like a retail store setting. So let me go ahead. I might have to switch screens for you. Just 1 second. Okay. Let me know if you can see that page. It shows a cell phone with a QR code on it.
Yes.
Perfect. So if your customer, if the merchant's customer is in store, we offer marketing materials like table tents, and whatnot that can be placed throughout the store so their customers can decide, can know that financing is an option, and also they are able to go through the pre-approval process without necessarily having to engage with a sales representative, if that's how the merchant wants the flow or to offer that ability to the customer. So what they would do is, just using their mobile device, they would scan the QR code that would be available throughout the store. And from there, it will pop up on their screen to let them know what exactly it is that they're doing. They're checking their eligibility. It's not going to affect their credit score. And then it'll let them know that it's going to be redirecting them to complete the application process. So here the customer would fill in their mobile number and just agree to the terms and conditions. They would continue on to the next step. They will get a one-time password, and that's just to kind of confirm that they have possession of that mobile device. The reason why that's important is because we use the mobile device as a way of proving who that customer is. And so that's instead of them having to send in, social security card or driver's license, that type of information. They'll enter in their social security number, and with that, we're able to pre-fill the application for them. They just have to fill in a few bits of information, like their date of birth, their email address, and then their annual income. The annual income, even though this is an individual application, if it is a customer who's married, John wants to include his wife's income in there as well, he can do that. So he can fill in whatever, their combined household income is, and then they can go to confirm eligibility, and they're immediately confirmed at that point that, hey, you're pre-approved for up to $12,000. These are what your payment options will look like. So this is what your monthly payment would be. This is what the term is. So a 6-month term. This is the APR. And from here, he can decide, okay, yes, I do want to go ahead and move forward, and sign up for this loan. They'll select which option it is that they want to pick, and then they will continue on to the next step, which they'll confirm. And from their phone, they're just going to sign the loan documents just like they would if they were in a bank branch, but they're doing it digitally. So they'll go ahead and confirm their identity again. If they sign up, on this particular program that I'm showing you here, if they sign up for auto pay, then they get a full 1% discount on their APR. They can sign up at the time of getting the loan or come back to that if they decide that they want to do it down the road. So they'll fill in their auto pay information, and they will have their disclosure statement just like they would if they were in the bank branch. They would finalize their loan. And this particular flow right here, what this does is this gives them a digital card, which gives them the ability to process. They will give the merchant the digital card information, and the merchant will be able to key that into their point of sale terminal. And this card right here, it's a single use. It's good for 10 days. So if they had to come back a few days later, they could, and it is only good for that particular merchant's account. They can't take this information and go next door and use this card anywhere else. It's only good for the merchant that it is set up under. Another part of this is this enables you to be able to continue running this through your credit card processing rails if you already have their merchant account. It is set up on a 0% interchange. So the merchant will have to pay a little bit depending on where you have them priced. But if it's interchange plus pricing that you had, you would be able to keep that full plus portion. And then there wouldn't be, you know, that full interchange part that would be billed to the merchant as well. Would it be beneficial, do you think, to go through, Jackie, and show what it would be like for an invoice type flow where the merchant would be pushing an invoice out to the consumer?
Yeah, absolutely. We have 40 minutes left for this call, so if you feel you have the bandwidth for it, absolutely.
Yeah, I've definitely got time for it. So let me hurry and pull that up really quick. Let's see, that's not the one that I wanted. Okay, and this just kind of gives you a little bit of an idea so that you can see both the customer side as well as the merchant side. And this would be more used in the case where it might be a home improvement type merchant. Maybe it's somebody that's selling windows or doors or something door to door. What they would do is they would log into their portal. They would be able to see all of the customers in their system. They would be able to see where they are in the application process. Maybe Jason Smith has not been approved yet. The link's been sent out to him, but he hasn't applied. You'll be able to see what the exact amount is that they were approved for, as well as the offers that were presented to your customers. But let's walk through one from the very beginning. So you're able to send the application link just by clicking on that top right-hand corner, and you would want to pre-qualify your customer. So one thing of pre-qualifying your customer is you're able to see what they are approved for without it impacting their credit score. That way the merchant might be able to adjust their sales methods to them, so that they could upsell the customer. You know, maybe they got approved for more than they were anticipating, so they can get, you know, the upgrade on the windows or whatever it might be. But the merchant would just fill out the first name, last name, email address, and mobile number, and they would be able to send that link out to them either via email or text message. So we're going to jump now to what the customer's view would be. So if it was sent out via email, she would get notification, you know, that she can go ahead and apply. She would select see my offers, and this is where she would confirm her identity so she can go through that application process. She'd enter in her social. We'd be able to pre-fill that application for her. She would confirm her household income or annual income, individual, depending whatever she wanted to. And then she would confirm her eligibility. So on this flow right here, because it's a different vertical, this one's approving up to $80,000. And you can see what the different loan options would be. This is what the payment would be, the rate, the term, all of that information. So from there, she knows that she's pre-approved for that amount, so she can use that in the decision-making process with the merchant. And flipping back over to the merchant's point of view, they can see that Cynthia has applied. She's been approved for up to $80,000, and they can see exactly what options, what loan options were presented to her that she'll be able to pick from. That way, when they're having the conversations with her, you know, the sales conversations, they'll be able to intelligently speak about what options she has to pick from. On that pre-approval, so depending on the vertical and the flow that they're set up with, that pre-approval is good for a certain amount of time. On the digital card flow, that was 10 days. On this flow, it's 30 days. And so from there, if she says, yes, I want to go ahead, I want this many windows, this many doors, the merchant would be able to send out an invoice to her and put what the total transaction amount is going to be. And that gets sent over to her, which she sees from her point of view on her phone, that she can see that this came through for a purchase cost of 70,000. She'll verify her identity. And then she will go through and she will pick which loan option she would like to move forward with. And just like we looked at for the digital card flow that we looked at, there will be a discount rate or a discount applied to the APR if she signs up for the auto pay. So she can go ahead and do that or skip it. She'll get that disclosure statement, and she'll also be able to finalize the loan. So this is her signing, saying, yes, I indeed want this loan. So now the merchant is able to see Cynthia has signed it for a $70,000 invoice and it's ready to fund. But they might not request payment until they actually install those windows or doors. So once they do the installation, then what they do is they would send a funding request over to Cynthia. And Cynthia from her phone would be able to confirm her identity and then accept that request. And that is when the merchant would be able to see from their side that it's funded, and they would see those funds in their checking account within 1 to 2 business days, just depending on, if it's midnight or something when it's confirmed, then it might not be that business day, it might be the following. So it's pretty simple process. You'll notice that the customer has about the same amount of information, if not less, than they would for a credit card transaction, to get that pre-approval and see that they're able to go through. The good thing that we kind of touched on a minute ago about these higher loan amounts, there's no lien. There's not going to be any sort of title or anything like that they have to have at risk with the bank. These are all unsecured loans. So it's a lot easier for the customer to get that from their home without having to go in and actually meet at a bank branch or prove their identity, because they're able to do it right there from their phone. So that being said, it is important that the customer that's applies from their own mobile device. In the case of, spouses, they won't want to apply. Like, I wouldn't want to apply for me to get a loan using my husband's phone. Any questions about either one of those flows?
We had an agent with a question. Mary,
Yeah.
can you mind unmuting yourself so you can expand on the daily pull from batches?
Okay, sorry about the delay there.
No worries.
Hello. So on previous programs similar to this, I understood that the fees would come out daily from a batch, from a settlement at the end of the day. So if they got, $1,000, depending on what the interest rate was, their fee would come out at the end of the day. It was simultaneously. So they would sit, let's say, $200 was the fee for that day. They would see the 1,000, but then kind of like cash discount, but they would see the $200 pool until the loan was paid in full. So is that the same thing?
No. So for us, we have a couple of different loan programs. The majority of the loan programs that we have set up today, the merchant would be paid in gross. So if they had that $1,000 loan, they will get $1,000 in their bank account the next 1 to 2 business days. And then they would be invoiced for the full month's worth of fees the following month. So if that happened today in November, in December is when they would be invoiced for, what we call the merchant discount rate. There is another situation with some of our lending programs where they would be held, it would be net. So you would see that similar to the $1,000 transaction. We'll just say that it's $100 fee. They would get that $900 deposit within 1 to 2 business days, and then they don't have to worry about paying the invoice, the following month.
Perfect. Thank you for answering that.
Yeah, and Shanley, you asked, so who gets charged, the merchant or the customer? The merchant is who will get charged on behalf. It's kind of like credit card processing. They have to pay a set fee to offer the financing. And then the customer, that relationship for their loan is between them and the bank, and the merchant doesn't have to worry about any of that, whether they default or, pay their payments on time or anything like that. And now I see your other question pop up. What about chargebacks? So chargebacks are a possibility, absolutely. Usually what's going to happen is we go off of when we have those disputes come in, is the way that we term them. When we see those disputes come in, the reason behind the dispute, we will look to see, maybe they said that they didn't get their product or services, or whatever the case might be. We look at what the merchant's terms and conditions are on whether that's going to be granted or found in favor of the customer versus the merchant. But as long as it's within the merchant's terms and conditions that they performed as expected, then it will be found in the merchant's favor.
Another question just came in. A customer of mine uses Snap and says they do 100 days, same as cash, and no fees to the merchant. Is there something similar here?
So they're not exactly. We do have one of our lending programs. This is more for enterprise size home improvement merchants. They do have a 0% MDR fee, and it can be for loans anywhere in between 6 months up to, or sorry, no, it's 24 months up to 25 years. Where it doesn't cost anything additional for the merchant to offer the lending. So there are those loan options out there and that will come up. But right now that only similar one is available on our home improvement program. That's for merchants that process about $100,000 a month or more in finance activity.
Thank you for answering that.
Yeah.
So he's expanding. I have a lot of automotive customers with tickets around 3 to 10K. So what would be typical fees for customers and merchants?
Good question. So let me pull this up. We actually have just launched our automotive program recently. And it would be in between. So the MDR fee, so the merchant fee would probably be about 8.99%. And that's to go clear down to 550 on the FICO spectrum. And then to go 660 and up, their fee would be 4.29%. So I know this is hard for me to be throwing out a bunch of random numbers to you, so I can put something together and send it over to you where you'd actually be able to see it in writing. But the loan options, the APR is dependent on the customer's credit profile. So in addition to the FICO score, there's a whole bunch of other data points that are reviewed and verified to kind of go together and create an overall credit profile or credit rating. And that is what determines what the customer's APR would be. And for the 660 and up customers, it would be in between a 12.99 up to 19.99. Or for those merchant or those customers that go down lower into the FICO spectrum down to 550, theirs would be in between 12.99 and 34.99. So it just depends on their overall credit profile.
Thank you for that, Corey.
Yeah, and Shanley, you asked what the cost to the merchant is. That just depends on their vertical. And obviously, you know, like who the merchant is, you know, we would have to review them and see what options they had available to them, what loans it is that they're looking, as well as what loan products. And the flat rate or percentage, usually it's going to be a percentage.
If there's any further questions you guys have, the floor is yours. Please feel free to unmute yourself if you have any questions for Corey.
Hey, Corey, my name is Steve. I'm a little confused, which is
Yeah.
not hard to do. So a consumer wants to buy XYZ for $3,500.
Mhm.
They get approved for $5,000, but the bill is only $3,500.
Yep.
So the $3,500 would be deposited into the merchant account, and then the consumer is on the hook for the payments of either 12 or 24 months, whatever it is. They're paying the institution themselves, but the merchant is still being billed 8% on
They
the
would-
overall cost?
Yes, the merchant would be billed whatever the MDR fee for the overall ticket amount. So if it
Okay.
was only the $3,500, if their or their MDR fee is 8%, just using the number that you threw out there, then they would
Right.
pay 8% of the 3,500 would be their fee
Okay, and that would be
for the loan.
on a monthly basis or
They
just
would
a one time?
they would be invoiced that one time. So if that
Okay.
loan was funded in the month of November, they would be invoiced for all of November's activity, not just for that one loan, but if there was other loans as well, they would be invoiced for the month of November's activity in December.
So if it was just that one loan, they'd be on the hook for 8% of 3,500.
Correct. Uh-huh.
And that
And
would
that's
be
just
it.
going to be the following month. So in December, they would pay that 8%, and then they never have to pay any other fees associated with that loan again.
So roughly $280 they'd pay, and then it's over for them. And then the consumer just pays the institution.
Correct. Yep.
Okay. All right. Thank you.
Yeah.
A question just came in, Corey. It states, I understand how we get paid if they get the one-time card. If the consumer goes the other route and the money goes into the checking account, how will I get paid?
That is going to be through Pay Compass would remit those revenue shares. And I'm not sure exactly what those would be. But I believe somebody on your team would be able to speak with that. Maybe not on this call, but offline sometime.
Yes, and if you would like to discuss that offline, just go ahead and contact sales@paycompass.com. The following question that came in is, so why is the merchant paying the percentage along with the customer of the merchant? I am understanding.
Yeah. So if you think, Matthew, and hopefully I will answer your question, I'm understanding it correctly. Think about when a customer is making a purchase on their credit card. The merchant still has to pay whatever their discount rate is to be able to offer the credit card processing or the ability to accept that credit card as part of their offering to the customer. So they have to pay some sort of discount rate to their processor. And the card holder, they don't have to pay anything additional necessarily to use the credit card, but they will be charged an interest rate. If you look at the credit card, well, it depends on what you're talking about, Shanley. Are you talking about the APR that the customer is paying, or are you talking about the MDR that the merchant is paying?
The merchant.
The merchant. It depends, because a lot of credit card processors might not approve accounts for them to get those 500 plus credit card transactions. Or even if they do have a high ticket amount approved on their merchant account, customers might not be willing to make those large purchases on their credit cards because the APR that is charged on their credit cards isn't, even on the best end, is going to be a lot higher than it is to get a loan. So instead of seeing a, 699 loan or 1199 loan, usually this typical, and Marilyn, I can see that you're on, so you can correct me on this. But I believe that the standard APR rate right now for credit cards is going to be 20% or higher.
That's correct. And also, we do offer, same as cash products, 12-month or 18 months for our home improvement merchants. So say you have a customer that's buying $10,000 windows for $10,000. They don't have the cash to pay for all of that right now, but we do have same as cash program where the customers can break out the $10,000 into monthly payments. So as long as they pay it out within the 12 months or the 18 months, they don't pay any APRs. So
Yeah.
you guys are able to close that sale by just paying, I believe, what our range is, about 4% to 6%. Does that answer your question, Shanley?
She just replied, I understand that side. It's the merchant part that I don't understand.
I think the point is that it's offering something additional for the merchant to be able to extend to their customer base. So this is going to be, the larger transactions, 500 or up, obviously, like we've covered that we can go up to $150,000 depending on the vertical. And so it's kind of trying to meet your customers where they are at.
That's correct.
There
And
might be customers that have cash that they can pay it, which is great. There might be customers that, they put it on their debit card, or they might get cash back or something on their credit card. So they prefer doing it that way. But not all customers are like that. They might have to get that loan in order to make the transaction. And what that's doing is that securing you being able, or the merchant being able to offer all of the different options to them. Then it meets the customer where they're at, whether they have the cash, whether they have room on their credit card or a credit card that can support it, or whether they want to put, it into an actual loan.
Hey, excuse me for interrupting, Mr. Steven.
I understand
Quick question,
all of
quick,
that
not a
side.
question. Can you hear me? Hello?
Yeah, I
Hello?
can hear you.
Okay, think of it this way, guys. You go to Bob's warehouse or furniture warehouse. You do not have $5,000 on your credit card, but you want to get the furniture, or you're basically Bob's will offer you this option where you can buy the furniture that you want, fill your house, and you have like 18 months or 21 months to pay it off, same as cash. If you don't pay it off in the 18 months, the interest applies on the 19th month. Do you guys follow?
I think everyone understands that side. I think it's more
It
of
seemed like
what-
somebody didn't understand that, so I was just trying to give
for me,
example.
it's seeing if we have regular credit card processing, no matter if they, get approved for a loan that's $12,000, $5,000, and Skeps side is that, oh, well, if they wouldn't get approved on regular credit card processing for that 5,000, 10,000, then no matter what, when that card comes up to enter it into the credit card system, it's still going to be blocked because our processing has blocked it at $5,000, $10,000, which normally if we do credit card processing and we know that they have a high ticket, then we can go in and tell PayCompass, hey, they have an average ticket of $500, but sometimes they have transactions of $5,000, $10,000. So we need to make their high ticket $10,000.
Yeah.
What I don't understand is how the merchant can be charged 5, 6, 8% on this one charge when interchange for this one charge that the merchant normally pays would be anywhere from 1 to 3%.
Because it's a different program. It's not
Yeah,
through
so-
the credit cards.
Yeah, so a couple of different points on that, Shanley, is The credit card side that I showed you, that digital card, that is only one option for the flow type that the customer might be set up under. So say it's a home improvement merchant that's selling the windows and doors. Obviously, their high ticket amount is going to be a lot larger, is going to be over $10,000. We'll just say $20,000-$30,000. A lot of our window merchants, that's their average ticket, and sometimes even higher than that. So if that's their high ticket amount, and we know, in between you as the sales rep and the merchant, we decide maybe that's not the best setup to set them up under with that digital card. It would make more sense to set them up with the invoicing flow, like that second flow that I had shown you. That way, they're not going to have to run it through the credit card processing rails. Well, that's an option. It's not a necessity. And then the interchange on this card, on that digital card, is a 0% interchange. So they don't have to pay the interchange. So whatever you have them priced at, the plus portion, that's what they would have to pay, not the actual interchange.
But in this scenario, no matter if it's invoicing or charged on a card, what is the merchant paying? Are they paying 5% APR, 4%, 8%?
That depends on the vertical and what loan options they're presenting. So if you have a particular merchant or a particular vertical, I would be more than happy to draw up and, an estimate or show you exactly what it would look like. They would still have a merchant discount rate, absolutely. But a retail merchant is going to pay a different merchant discount rate than a home improvement merchant.
I get that, but any which way I look at it, I'm trying to wrap my head around the fact that the merchant is paying a substantial APR on a loan when they look at it and they go, my customer's already paying an APR on the loan.
Yeah, and that's the bank works it both ways, depending on what program it is that they're working, where they would oftentimes they can charge a higher rate to the merchant so that they can offer lower APRs to the customer. But it just depends entirely on a lot of different things, the vertical, the merchant, what their processing volume's going to be. Just like with credit cards, if they're going to be running more through it, there's going to be a lot more flexibility in order to decrease those rates. But yes, you are correct that they are going to be charged for being able to offer lending to their option. But the idea is that by offering an additional payment method to their customers, they're going to be able to grow the number of sales that they originally would have had without being able to offer that lending option to them.
Yeah, and this might not work for your merchants where you already have credit card processing set up for them, like lower ticket item merchants. But this is the lending program is definitely going to expand, the pay over time solution offering to merchants with higher tickets. Home improvement is a great example, like Corey mentioned, and also in our portfolio, we do have merchants that set up saunas, whirlpools, and tubs outside of their homes is one of them. So, yep.
Yeah, it's definitely geared more towards the merchants that have those higher ticket values.
Thank you for expanding on that. Is there any further questions?
Since I jumped on late, I just wanted to jump in and introduce myself. Corey reached out to me on Friday, super excited about this new partnership. So I am Marilyn. I'm the Director of Customer Success. So my team partners closely with the merchants to make sure that they're successful on the platform once they're live with us. So I'll work with them on, things such as getting their users onboarded and trained on the platform. I'll do periodic activity reviews for those large volume merchants. Things like usage, reviewing their adoption rates, and also reviewing application and contract and funding conversions. So what I would ask for a very smooth handoff from sales to customer success is I'd like to have as much information on the merchant prior to handing off and prior to training to make sure that we give them personalized support from day one. So when lenders, which lenders they are currently using or have used in the past, what do they like about them and what can be improved, how they market pay over time financing, or do they need any help from us to market pay over time financing, what their blockers are, or who is the best contact that I should be working with to help me drive adoption. So typically, what we see are delays in adoption. You have CEOs, CFOs, or business owners that love, the cost savings. However, they may run into some challenges of delivering that same message to the sales team. So the more information I have, the more, we avoid delays in adoption, if any. So looking forward to working with you guys.
Yeah.
I
Thanks,
have
Marilyn.
I have a question. How does this differ from a firm?
So a firm is going to usually be more the rigid pay over time, 3, 4. They don't necessarily focus on the higher ticket amounts. And I believe that a firm they lend based off of their own balance sheet. They don't partner with other banks. And so they have a limited amount of lending ability. And another thing is that in order to do a firm or Klarna, the customer has to sign up, and actually create in a firm or Klarna account. And then a firm and Klarna will actually target their customer to try to get them to make other purchases with other merchants that are also using a firm or Klarna. Whereas we don't target the merchant's customers. They become they'll have an account with the bank, but we're not going to push out to them saying, hey, there are these other merchants that you could also get a loan through, and so their merchants or their customers stay their customers. We don't try to target them to get other lending or sales or anything like that.
But does a firm charge the merchant money, or they just deposit the whole thing and then they go to the consumer to get all their money from?
I assume it's probably based off of the lending programs, but I believe they do charge the merchant as well.
Okay, thank you.
Yep, no problem. Any other questions before I move on to how to refer an account over to us? I know we're kind of wrapping up on time here. Okay, so to kind of go, just so that you know what verticals we're currently targeting and able to support, we're always looking to add new verticals. So if you guys have a good portfolio in a specific vertical that you're not seeing here, let me know and I can let you know if it's one that we're already targeting to get a program set up for, or if there's enough of a demand for it, maybe it's something that we can add to the list to target. We have automotive merchants, and that is going to be your repair shop, tire shops, etc. Electronics, furniture, health and wellness, which includes medical, dental, as well as spa services. Home improvement is a big one. Home security, so your security systems, alarm systems, and home automation, jewelry, professional services, travel, etc. that you see on there. And there are a lot of different lending programs, especially because we work with multiple different banks. I could provide you 40, 50 pages worth of stuff, but it's going to be very cumbersome and I don't want to overwhelm you with it. So if you have a particular merchant, whether it's a particular merchant or you just have a good, a set of merchants that have a specific vertical that you work with, if you need help determining what programs those merchants might be eligible for before you actually take the information to them and have that sales call, let's talk. I am here in order to kind of break down and educate you. Obviously, the more exposure you have to the program and what we offer and everything, the more you're going to be able to speak without, having to ask me or run things by me. But that is what I am here for. Like my whole purpose is to support you guys. Marilyn talked a little bit about the information that we need. Ideally, I know that it's different in the beginning until you guys get a little bit more well-versed in Skeps as well as the different lending programs we have. I'm happy, especially in this initial phase, to have those calls with you, to have joint conversations with merchants. I understand, and the goal is that I can support you enough that that's not always going to be a necessity, that you'll be able to run with those conversations and just kind of hand them off to me when they're ready to get set up. And in that time, in that kind of process, this is what I would need from you. So if you're referring a merchant over to me, to say, hey, they're ready to get set up, then what I would need is I would just need you to send an email to me to let me know. And then I will provide you with an intake form, and that intake form will kind of outline some of the information that Marilyn was talking about as well, which is the merchant's business name, their URL, who I will be talking to at the merchant's, business, what they provide, their vertical, a little bit more information about them as a business. And then you can also see down here at the bottom, their current financing partners, whether they have pain points with those current providers. And if you happen to know what their pricing is with those partners, the reason why we put that in there is couple different reasons. One, we want to make sure that the program that we are offering is always competitive. We're told that it is by our lending partners, but obviously the merchants that are using it can provide even better insight into that. But also we want to make sure, if we can meet or beat the pricing they have with their current providers, we're happy to do that. We think that our platform speaks for itself, and that they can, they will love the service, both for the customer side of things as well as what the merchant's flow is, that they'll pick us over another provider, but we always want to make sure that the lending programs that are available to them are always going to be the most competitive. And like Marilyn touched on, who does your merchant reach out to, if they need help? If it's a prospective merchant, they are going to be reaching out to me. However, if it's an active merchant that's already onboarded onto the platform, they will reach out to the support team, to Marilyn's team or Marilyn directly. And I've included the customer service line and email address on there as well. Do you guys have any additional questions?
An additional question came in. Do you have any programs that do not charge the merchant?
We do have some. The one that is sticking off to me at the top of my head is going to be on our home improvement program. And that's going to be for merchants that are financing over 100,000 plus a month, where the merchant discount rate on one of the loan programs on there is 0%. That being said, the loan programs are constantly changing. And if that is something that the market is demanding on a particular vertical, then, hopefully that's something that we can be offering. But if you're seeing, where a particular vertical that's being offered and there's just no way to win a customer or a merchant's business because they need something in particular, let us know. We want to make sure that we have all the information both from merchant and bank side that we need. So if there is definitely a demand for that, and it's something that is, out there for the market, then we can definitely look into it.
Is there programs that do not charge for the merchant for automotive?
Not today, no. Automotive, so the automotive program, and this is just generally speaking, if somebody is looking to, maybe their transmission went out, the automotive program is a little bit more difficult because typically the people that would be financing repairs like that are going to be lower on the FICO spectrum. And so they're a little bit higher risk. So that's why we're able to go, we wanted to make sure that when we launched our auto program that we were able to go really deep into that FICO score down to 550. But no, there's no automotive programs where the merchant would pay 0 today that we have.
Thank you for clarifying that.
Yep.
Is there any further questions before we wrap up today's call?
Awesome. Well, thank you guys for taking the time to have both Marilyn and I on the call today. And any questions at all, whether it's general questions, whether you have, perspective, vertical that you want to learn more about, or whether it's prospective merchants that you have, please don't hesitate to reach out to me. Like I said, my whole job and reason for being here is to support you guys and make sure you have what you need in order for all of us to be successful.
Perfect. Thank you, Corey and Marilyn, for joining us today and providing insight on the many features that Skeps has to offer.
Yeah, no problem. Thank you
Thank
guys for
you.
having us.